Malaysia's economic growth moderated sharply to 0.7% in the first quarter, hammered by measures taken both globally and domestically to contain the spread of the COVID-19 outbreak. This is the weakest expansion since the third quarter of 2009, when the economy shrank by 1.2%. And things are set to get worse before they get better. Bank Negara Governor Nur Syamsiah Muhammad Yunus says the MCO, which significantly curtailed economic activity in the first quarter, will cause the economy to contract this quarter. Gradual improvement will come in the second half of 2020, supported by sizable fiscal, monetary and financial measures and progress in transport-related public infrastructure projects. As for full-year growth, Nur Syamsiah says Bank Negara will provide a revised economic forecast in the second half, once there is more clarity in the data and outlook. Last month, the central bank had forecast the economy to either shrink by as much as 2% or grow by 0.5% this year. Putrajaya is working on a 6-month short-term recovery plan to revive the economy and will announce it by the end of May. Senior Minister of International Trade and Industry Datuk Sri Muhammad Azmin Ali says this plan will be followed by a medium-term revitalisation plan under the 2021 budget in November and then by a long-term reform plan, which is the 12th Malaysia Plan that is scheduled to be revealed in January next year. Azmin was addressing a webinar by the Electrical and Electronics Productivity Nexus. He stressed that it is imperative that businesses remain sustainable in the longer run and says MITI will do its best to bolster industries and businesses, particularly the SMEs, and to ensure the sustainability of jobs. The minister noted that the cumulative losses incurred by the electrical and electronics sector is estimated at 7.3 billion ringgit of GDP, while the impact to exports is estimated at 29.1 billion ringgit. Last year, this sector contributed 81 billion ringgit to GDP, while its exports amounted to 380 billion ringgit. The Dewan Rakyat may miss the motion for the no-confidence vote against Prime Minister Tan Sri Muhyiddin Yassin on May 18th, as there will be no sitting at the one-day session. In a statement today, Dewan Rakyat Speaker Tan Sri Muhammad Arif Muhammad Yusof said the May 18th session will only witness the opening speech by the Yang di-Pertuan Agong at 10 a.m. This, he said, follows a letter from Muhyiddin, which informed of the government's decision to amend the session's agenda on grounds that the COVID-19 outbreak in the nation has not subsided. He said this is in line with Article 11 sub 2 and 15 sub 2 of the standing orders of the Dewan Rakyat. Dewan Rakyat Secretary Ridwan Rahmat will issue a new notice for the session to all MPs. Starmedia Group says its Chief Executive Officer Andreas Voyazakis is leaving the group. In a stock exchange filing today, Starmedia said Voyazakis resigned to pursue his own interest. This confirms a report by theedgemarkets.com earlier today, which wrote, quoting several sources, that the Greek is leaving after 9 months on the job. He informed the company's senior management of his decision just this morning. Voyazakis was appointed to the CEO post on August 13, 2019, almost 8 months after the position was vacated by Datuk Sri Wong Chun Wai, who retired from his CEO cum Group Managing Director post on January 1, 2019. Prior to his stint in Starmedia, Voyazakis was the CEO of Havas Media Group Malaysia between August 2016 and June 2019, after having served as the CEO of Omnicom Media Group Malaysia since 2006. RHB Research is expecting Genting Malaysia to register unprecedented losses in the second quarter, thanks to movement restrictions imposed amid the COVID-19 pandemic. The research house notes that Resorts World Genting remains closed, with the CMCO now extended to June 9th. The 12-week closure should lead to an estimated loss of 6 to 7 million in visitor arrivals and about 1.6 billion ringgit in revenue. Meanwhile, its overseas operations are seen bleeding a cumulative 60 million ringgit in revenue for every 1 week closure. While the first quarter results should still register positive EBITDA, RHB says the second quarter will likely see negative EBITDA of circa 300 million ringgit. It expects the group to register 141 million ringgit losses for FY20. Still, it believes Genting Malaysia should be able to withstand this challenging period given its robust balance sheet. RHB says earnings ought to eventually recover, while its long-term prospects remain intact. It maintains its buy call on the stock with a target price of 2 ringgit 97 cent. The stock closed today at 2 ringgit 31.